Alrighty. All right, so I'm gonna just start off with EU. Is there any pairs y'all want to start off with first, or do y'all want me to just go down my list that I want to go through? Because I'm gonna just start out with EU. All right, no, all right, let's do EU. So EU, looking at EU right now, right now we're chopping around this little range right here, and I'm looking at the drawn price to still be potentially bearish and push down below this low and down here, because I'm not trying to call a bottom yet, especially with what price action is doing all inside of here, leaving dojis, and it's not enough right now. So I'm still bearish right now, and you could see that we came in and we rejected in this imbalance right here and rebalance this, and that's why I'm looking to have sensitivity to possibly push down lower, which we already did reject up here inside of this price range right here. And then we have this order block in here resting above with this buy side liquidity in here. So what do I think price could do? Potentially higher time frame draw. I'm looking at price to draw lower for right now, but the current draw right now is potentially this rejection block right here and this high up into here, and anything higher, it'll be inside of this price range right here, where I'm looking to like kind of be like resistance. Once we break above this price range right here, then I'll be a little bit bullish to potentially draw higher up into more premium arrays, which would reside up here. So what I'm looking for right now, when you go to the 1 hour, you have price reject. Well, last week we took out this low here and we came back into this daily order block, and then we had a push up, right? We had a push up, and now we have it from this low to this high. From this low. Hey, can you mute yourself for me? I appreciate it.
Do you remember that? What for that blood clots?
Roderick.
Okay, I've got to give you one now.
Just one?
Yeah, I just give you one. Yeah.
Okay.
You get them every year.
Now you're talking to somebody. I'll do it for you, bro. I'll do it for you. All right, but yeah, we're in this range right here from this low to this high. This is my Dillinger range right now. We took out liquidity here and here, and then inside of this PD array, we had a push up and we took out buy side liquidity, right? So we still have some liquidity left to the upside, and we're working in this range where which we came into a discount, took out this low right here, took out this low, and then we had a run up. So right now, this is my current range that I'm working in right now. So I'm expecting this low to potentially be protected. And my PD arrays right now that I'm looking at right in here. Yo, what's up, Kazi? The PD arrays that I'm looking at right here, right around here, is this bullish order block right here. Okay. And the reason why I'm looking at that potential order block is because we have this clean down move right here. We have this clean down move right here, and then we went right through it. So I'm expecting this range to be respected, to push up to the drawn liquidity, because this is a buy model that we're in. So once we come back into this order block, I want to see what price does. We have liquidity potential double relative equal lows to be ran out. Even though price came down right here and took out this low, I want to still see this get ran out unless we aggressively move up from this high and then we start coming down lower, because then I would expect this range right here to be respected, to push up to the drawn liquidity. Whenever you have a draw that's say you're seeking higher objectives and you're inside of a market maker buy model, you want to see order blocks, down candles be respected. So I expect that's what you want to expect. Now you can say like, okay, this would be inducement or whatever, you know what I'm saying? You could say that, you know what I mean? But like, no, you should expect, when you're thinking of clean order flow to get to a draw, you want to see clean order blocks be respected, especially since they already worked in this range here. They already worked in this range here. We pushed up into this area where they sibbied down, and we pushed right through that. So I expect this to hold instead of us coming down. That's what you want to see. You want to see this fair value gap be respected. Once we come into here, you want to see this be respected and then push up. If we push up, then I expect us to come back down and utilize where they redistributed at right here, reaccumulate at right here. I don't expect us to go below this low to push up to my potential draw on liquidity, which would be up here, this high. All right, let me take this out, clean this up a little bit. Once we come into here, I want to see what price does into here because of that buy side liquidity resting right in here. I want to see what price comes into here. I'm not calling tops or bottoms because you know what I mean? We're chopping around here and our higher time frame draw can still be lower. So once we come into here, we can still push through that and push through this price range right here, right? And that's when I'll be more bullish, seeking higher time frame, bullish objectives. All right, so that's it with EU. Basically, if we have some reaction inside of here, which is inside of this range that I'm focused on, and we start getting reaction around here, then I'll start looking to sell. So it'll look something like this. Hold on. Come into here, run this out, and start creating a new sell model to start pushing down and take out this low resistance liquidity that's being built up here, and then push lower into our higher time frame objective, bearish objective, which is these fair value gaps under this low right here, and into the monthly order block open, which would be inside of this breaker of the higher time frame order block, basically the breaker of the higher time frame monthly order block, which is right. I'm gonna show y'all, which is this up candle right here. We're already inside of that, but right now we didn't get the reaction that I'm looking for. So my higher time frame is still bearish. How do I draw the PD arrays? Okay. So it's gonna take some practice when you do it. Mainly when I'm doing my PD arrays, I'm finding the lowest down close candle. So as a bullish order block, I'm looking for the longest down close candle that close. And if it's bulky, you could have one right here and it could be a little bit lower and it'll be a down close candle. But since this is the bulkiest one and it's very low, I'll use that one instead and draw out that whole range, because above that you'll have like a breaker. There'll be a breaker inside of that. So like if you look at this, right, this whole up candle right here is the breaker of this down move. So if you want to refine, you could look at this and expect price to hold this. It doesn't matter if the wicks go below it, you want to see the bodies close inside of it. But mainly it's this whole range right here. You know what I mean? But yeah, it's this whole range. So that's how I mark out order blocks. You want to use the longest down close candle right here. Let me give you another one. So right here, this is your highest up close candle. There's up close candles inside of here, right here, but this is how you would draw it right here. Your highest up close candle. Yeah. PD arrays are just POIs. That's all it is. So however you draw your POIs, that's how you would draw PD arrays. Same thing. But a lot of people don't know which ones are more valid than the others, because you got to know what institutional order flow is doing. But yeah, all right. So yeah, that's it with EU. Sorry, I'm sitting on EU for too long. Let's do GU. Oh shit, hold on. Clear all this out. Matt over here got the cycles out and shit. All right, but yeah, all right. So Daily, right? I'm bullish on GU for right now because we did close above this up candle, this down candle right here. So I am bullish and I can expect us to start pushing higher and clean this up right here. All this up, we could clean up and then come into a higher time frame. This premium up here. You have a daily order block right here, and you could use this one. You could use this one too, but I have this one marked out, and then I have the breaker of it marked out. So this is like the refinement, and this is the breaker. So it doesn't have to come all the way up here. It could just play inside of here. You see this little bit of FEG right here. It could play inside of there and then start creating a new sell model, which is like a stop point, breaker structure, right? Redistribution, and then continue down. So it could get up there and then start selling off again once we come into this PD array. Plus, look, you have this daily mitigate. Well, this would be a breaker too, because we took out the liquidity here. You have this daily breaker right here that's in line, aligned with the PD arrays up here. Okay, so you could pay attention to that area. That's a really good area. So what I'm looking for is for price to potentially start trading up to clean all this up here. And what I'm focused on is, oh shit, this right here. These two consecutive down candles right here. And then I'm focused on this up candle right here that made this push down. So inside of this range, I'm focused on price coming back into. You have this down candle right here. So you could refine it to that, mark this out. You have imbalance left inside of there. Pay attention to here. This is just a breaker that created this down move right here. Took out these lows right here, and we pushed up into it, out of it. So you pay attention to this area right here. So what I'm looking for right now is for price to come into this area and then give an entry model. This could be a turtle soup, stop hunt, breaker structure, back to FEG, or whatever your model is that you align with. So yeah, that's what I'm looking for right here. Once we come back into this area inside of here, I'm looking for an entry, some type of entry inside of here to push up, and then potentially it'll be other areas that we could get into to potentially clean all this up in here, this whole range. It's a fair value gap right now that price is working in. You see this right here. It's a fair value gap that price is working in right now. So this could be the reason for this to sell, to come back into here and then push up. So this is a good PD array for short-term sales, but higher time frame, I'm kind of bullish right now, like I said, because of that down candle that we broke above. So this is my range of opportunity right now, from this down candle here to this up candle here. That's my daily range of opportunity right now. But right here, we could get short-term sales to come back into here. It could form a sell model to come back into here and then start pushing back up. All right, my fault, y'all. Little brother came in here. All right, but yeah, that's what I'm looking for right there. Which y'all got any questions with this? Some more of draw. Kazi, you guys on
What you mean
liquidity.
gay? How's that gay, bro?
You guys, but
It's not gay, bro.
but yeah, All right, but yeah, more on draw. So this basically you want to find areas where you think that people will have their stop losses. Okay, so there's liquidity at old highs, there's liquidity inside of fair value gaps, but mainly when I say draw, my draw is the most recent area where I think they would have their stops at. So you will look at this right here, break and retest type of thing going on right here. And you can see how many times they worked inside of this area. So they kept selling here, sell here, sold here, and then now they're trailing. They sold here, stops above, trail, look, sold here, sold here, stops above. Once this broke down, they're trailing right here, stops above, and then they sold a little bit more right here and then broke down. So once we took out this external liquidity here, right, and you got this run up, you have to seek these highs right here for a draw on liquidity. All right. So it's like a magnet. This is what I'm expecting price to get up to. Now, I'm not saying it's going to get up there. It could sell off, you know what I'm saying, and push down to my higher time frame draw, okay, which is this low here, okay, old low. Then you have a fair value gap inside of here. So let me move out this sell side liquidity. So right here, below that, and then you have a short-term fair value gap inside of here, and then you have an order block. So that's where my higher time frame draw is. That's where I'm expecting the weekly candle to potentially push through. Whatever candle you're looking at, that's where I would expect price to push through. So when the next candle
Wait. So you think it's gonna sell through there?
sell through here,
Yeah, through that sell side liquidity.
I think it can get down there. That's my
All
draw.
right, bet. I'm about to press my sell button right now.
Nah, bro. But that's my draw. That's where I'm looking for price to potentially get to on the weekly. But once we start breaking higher, like on a daily here, then my daily draw would be up here. But right now I'm not calling no bottom. But since we took out this external liquidity and we broke above this order block, this is a newly formed order block. So you can start buying as soon as price comes into this. It has a Judah swing or power 3 right into this, and then push up to seek this draw right here. But if we don't do that right here, and it's not showing us that we want to sell down, we go back to where our higher time frame weekly draw was. So right now, I'm bullish on daily, still bearish on weekly, but bullish right now because I'm expecting us to potentially run this. If we don't, then I'm expecting us to come, like, you get more data during the week, whatever weekly models that you have, that's what you look for to get back down here. And that's what I would expect. So if like Tuesday made like the high of the week or whatever, we took this out, which I don't think is going to do that. But say we didn't get up to here and we reacted to some type of PD array inside of here, which is more low probable to me, or we just ran this high out right here, created like Tuesday high of the week, and then we broke down, then I would expect us to get back down here. But if we come down here, I'm expecting to buy and potentially run this out, all the sellers that are trailing their stops through here. But yeah, that's it with GU. Yeah, basically, you're drawing liquidity. Yep, they're basically your targets. You said in a limit order? Nah, bro. I don't really do limits like that anymore. I just let price show me what it's gonna do, and then I have a entry model. I mean, like once I see my entry model, then yeah, I'll set a limit. But if you just set a limit, let's say even like if this was like let's say this was like the 5 minute. If you just set a limit right here, you don't know if price is gonna uh respect this PD array inside of here, right? It could just run lower. But that's when you're just guessing at that point. But once you have a entry model inside of here that shows that it's respected, and you understand what order flow does inside of certain PD arrays, fractally, you see that a buy model or something or a sell model is starting to form, then that's when it's like, okay, there's my clue right there to enter right there. And you back test and you see that it works out for you, then yeah, there you go. So you want to have something like that, and then risk management behind that. my risk management and my trade management, I don't really use limits like that unless I see my entry model, and then I'll put a limit when my stops below a safe area. Yeah, so like say if price came into here and then it let's say this is like my area, right? And I see price come into this area, so it could look something like this. It'll come into this area, right? Work this fair value gap, rebalance that, come into here, maybe take this out right here and come deeper inside of this zone right here, inside of this zone, come deeper, and then you see equal lows be built up, and then a run on that, and aggressively, maybe this is around like New York, you see that, and then this would be my entry back to OTE. That would be my entry model right there, and then a breaker or order block, whatever price did in here. It switches. I either take an OTE, order block, or a breaker, depending on what price did into here, inside of here, right? But yeah, and then I'll enter here. A lot of people, they'll put their stops here, but I don't. I put my stops up below here just in case it wants to have another run and then a push up. But if I do want to put my stops here, then I'll wait for that same entry model inside of here, and then I'll enter here and then put my stops below. That's just how I work it, how I work my positions in, and then I just stack. I stack my positions. But yeah, like we're working this fair value gap right now to potentially push down, and you can see it's a short-term entry model right here. Stops above. It could be I'm not saying so. I'm not a financial advisor, all right? But yeah, but this is like what I would look for inside of here. You can see it on, even if this was like the 30-minute, like say you're on a 1 minute, you could see it on like the 30-second. If you don't even have to like scale down to like time frames to see it. But yeah. How many pairs you trade in? 1 minute buy sell model is enough when prices in. Yeah, if it's in a PD array and you start seeing a buy model start to form, and you start seeing a shift in structures, then you could take that and then put your stops below whatever area. Like I can't tell you exactly where you should put your stops, or I could give you a suggestion, but it's really up to your plan. How many pairs you trade in? I usually focus on GU, EU, gold, and US30. Mainly GU and EU I'll look at, and then if there's really nothing with GU or EU, I'll go to gold and US. So I kind of like switch through those and see what opportunities are in there. But yeah. All right, but yeah, that's it with GU. Let's do US30 real quick, and then we could restart this back up if you guys want. What's up, Kazi? How do you catch every move? You just gotta be the market maker, bro. I also saw a sell model on GU. You have at hand the ICT's lecture where he teaches draw on liquidity? No, bro. Visit at IML. All right, but yeah. With US30, oh shit, let me not put this on here. With US30, my draw is higher prices right now. I want to see what price does once we get into here. And then possibly up here. But we could start making new highs. But right now, I want to see what price does once we take out these relative equal highs right here, this low resistance liquidity, and then come into this area here. right now, since we're drawn to that, I really don't like this PD array that much inside of here. But this is an area you could pay attention to and wait for a model, and then wait for 7 o'clock. Let's say what is Monday. Say we're hovering above this price before 7 o'clock New York, which we're probably not. And then we have that Judas swing down. You could possibly take a buy inside of here or below this in this PD array somewhere in here. Let me see. I really would like to see this whole range hold. Yeah, I want to see this whole range hold, to be honest. But since we took out this external liquidity, we could come lower and then possibly push up. But you have to pay attention to this too, as well. These lows as well, because we could just run down and then move up. But I would rather see us get to this draw first. Come into here, get to this draw first, and then we start running down. But yeah, that's it with US30. Y'all got any questions for like 5 minutes? And then we can run this back up.
No questions, good sir.
All right. I'm seeing if I missed any. Okay, so I didn't miss any. Yeah, so with gold, looking at gold, where we came from this this 1 hour order block right here, and then we pushed down off of that, and we constantly seek sell side objectives, which we took out right here. So we took out all that liquidity here, and then we pushed up and constantly pushed up, and then we left this buy side liquidity here, sell side. What is the word? Low resistance liquidity right here, buy side. All right. So what I think price could do is push up. Like right now, we're reacting off of this bearish order block, but my draw is here right now. My draw is up here. So once we come down into this down candle here, I would like to be a buyer and then possibly push up to take out this buy side liquidity, come into this array right inside of here, and then potentially push back down and seek our weekly and daily sell side objective, which is down here, which I think price is drawn to since we came into here and we've had a displacement lower. I'm looking for us to get down into here. There's a rejection block here, and then possibly down here. So what I would like to see is price come into this price range inside of here. So they aggressively sold down here, right? Leaving this fair value gap, and we push right back into it through it. So I'm looking for this area to become like my support. And I don't want to see price really disrespect anything inside of here, inside of this little range. So once we come below here, we have sell side liquidity here at this low. I'm looking for that to be ran into this PD array here, which is in line with these up candles inside of here. So this full downswing right here is just a higher time frame order block like you saw. And you have these up candles, which is a breaker, basically the breaker of this down move right here. And then you have this price range that should be respected once price comes into here, bounce off of here, and then take off to take out buy side liquidity up here, or maybe just even this high and then continue back down possibly. But I would like to see us get above these highs right here and then get up into here and then possibly sell off again. But yeah, that's mainly it with gold. If we go to the 30-minute. Okay, let me take this out. Yep. Inside of that range, you have this down candle. So I expect this to hold, this down candle to hold. Once we come into here, this is the 15-minute. So this would possibly be around like OTE. So I could just be a buyer once we come into here, maybe add in like half a position around OTE right inside of here, and then push up off of that. And then once we come into here, maybe create some equal lows, run it, and then scale in a position here, put in like 0.5%, and then once we come back into this array and then work this, and then I see it being respected, then I'll enter my other half there to reach higher time frame objectives, and then keep my stops below here on my second position. So first position here, stops below here, because I expect this range to be respected, and then stops below here once I see this get respected to push up, and just keep scaling in on the way to this buy side objective, my 4 hour 1 hour draw on liquidity, which is this high once again. But yeah, so once we push up off of this, I think that's not how much I will only scale in once we push up to get up into here. So yeah, that's it with gold, basically. I think we could see up here. It's very probable. I think that's all the pairs. That's all my pairs that I usually go through. It's only 4 people in here. Do you guys have any questions or anything? Yo, what's up? What's good, bro? Can I review this? Okay. Wait, which you want me to review both of these charts? Okay. No, you good, bro. Oh, the second one. Okay. So not this one. All right. My internet is taking like 55 million years just to load some shit. Let me clear out this tab. Yeah. Wait, did I not put in the all right. Yo, that's funny. That's tight. You be posting on Trading View. Do people get active on here? Just for journaling? Oh, okay. Let me close some tabs. Hopefully that'll help. Okay. All right. All right. So let me see. So you're expecting price to draw to this right here, this order block. So that's your target, which is cool, pretty good. Yeah, that's a good target. I don't really know what the higher time frame looks like. We could go check and see. Your order block was good to be used. Your stop, I wouldn't have my stop right here. I would put it like right below here, because this is a full down candle right here. This is their longest down candle. So once they could easily just come through here and then come down just like that, come into this rejection block and then push price up. So it's good to practice keeping your stops out of institutional price action, basically. Oh, it's played already. Oh, okay. Oh shoot. Yeah, this should have been this shouldn't have been a loss though. Yeah, this shouldn't have been a loss. Did you take partials, or what did you do? What was your risk management? Took partials. Okay. Yeah. So yeah, you took partials. Yeah, that's exactly what I would have did. When it became like halfway, when it moved like halfway up here, maybe like a 1 to 3, 1 to 2, I TP. I take partials at like a 1 to 2, 1 to 3 all the time, and then I'll leave runners to wherever else it wants to go. But yeah, yeah, this was good. This was good. It's funny how they ran this low, and then they wanted to push up from there. I wish I could go look at the whole thing. Oh, I could zoom out. Yeah, yeah, because once they built this up right here, they built this. You know that buyers are trailing. So right here they bought, right here they bought, right? Usually when price starts to do this, you don't really want to see it come back down like that. So you can expect it to be ran when you constantly see price coming back to work areas like this little trend line that's going on right here. So once price comes to mitigate, you just want to see price run, right? So after this third one right here, you just want to see price run at that point. You don't really want to see it come back down. So like if you worked it in right here and it went up and then it started coming back down again, you should have just break even at that point. My little brother going crazy, but yeah. Yeah, this was a good trade. I would say good trade. Yeah, I think I would have got in right here too. I wish they had it to where you could like actually go to like the different time frames to actually see it, like go through it. But yeah, that's tight how like it really like played through. That's tight. Yeah, that's tight. All right, but yeah, back to what I think we already ended all the pairs. Do you guys have any other pairs you want to go over, or any other questions or any other trades? Like bro, I sent. Why did you put the little circle here? You were just marking out this being reaccumulated? I mean accumulation. That's why you marked this out. Because you considered as fuel. Okay, yep. Yep, nice. Very nice. Yeah, usually when you have this build up right here and you see a run up like this, you can expect price to take out the low that ran out stops, right? Especially if it's like this choppy and you see a quick run up and it starts pushing down like this, yeah, you expect that to get ran out whenever they take external liquidity. So this is like a 1, 2, 3 type push. You expect the second 1, 2 to get taken out and then a push up like you did right here. All right, how do I get out of it? How do I go back? Oh wait, I got it over here. Never mind. Yeah, but yeah, but yeah, that's it for gold. That's it for all the pairs that I usually trade. If you guys want to go over any more other pairs, let me know right now, and I can go over any of the pairs. You guys can ask any questions that you want. Like I can answer. I'm an open book. You feel me? I don't really hold too much back unless like it's too hard for me to explain. You got to do your own um, chart work to get to that objective. How do I trade higher time frame FVGs? So I just wait until price. So like, so let's say this is my move here. Okay. And there's an FVG right inside of this area. Okay. The only time I would trade a FVG is if it's in a discount array, if it's close to like a discount array. So let's say like there's a order block, a higher time frame order block. So let's say this push down, right? Okay. So this push down is like a higher time frame order block right here. So the only time I would trade a FEG is if price is in line with that. So I will wait for price to come down into that array. You also have this area to pay attention to because they redistribute it in this area right here. So in a buy or sell model, you'll have areas of reaccumulation and you'll have areas of redistribution. And wherever they redistributed at, they'll reaccumulate back into those areas most of the time. If they go below these areas and if they already worked into this whole range right here, then it's most likely going to come for this low, right? So whenever I have an FEG, I just pay attention to whatever institutional confluence lines up into that, and it has to be at 50% at least of my dealing range, because price has you have an interbank dealing range, right? So when price runs out of low and then it goes up and it runs buy side liquidity, they took out liquidity here and they took out liquidity here. So they wiped everybody out right here. So now this is your range that you're working in. And usually the algo comes back to 50% to start dealing out their orders and start putting in more orders to buy back up and seek higher objectives, right? So it has to be at 50%. Sometimes I'll wait for a 62% retracement. And a lot of times I don't. If I'm very comfortable, if I really think price is gonna go up, then I'll put in half of my position here. And then once they work into that FEG, once they work into it, right, I want to see the bodies close inside of that FEG. I want to see bodies close inside, and I want to see price work into it. And then once price has my model inside of there, right, I'll enter my other half of my position in, and then I'll put my stops wherever I think they shouldn't come back to because they already worked in, and then higher time frame. If I want to keep it at this low right here, so you see how we have this low that got built up in here, and then we broke structure here, right? If I want to keep my stops under this, I want to see FEGs inside of here. Let me clear this up because it's starting to look messy. It's starting to look real messy. Hold on. Okay, so you have this model here, right? Whatever model you're comfortable with, I know a lot of people, this is the most popular, and a lot of people use this, right? You want to see FEGs if you want to put your stops. This is how conservative, I'm very conservative, right? So before I will put my stop at this newly protected low that I think should be protected, right? I would have to see price come in and actually hold it. Whatever FEGs inside of here, I want to see it get respected. And then when price makes that move up, this same little fractal right here would be on like the 30 seconds or what's it called? You just don't have to go to the 30 seconds or whatever, 5 minute. Just understand there's always the price is always doing three things. It's either four things, okay? It's either consolidating, expanding, retracing, or reversing, okay? That's the only four things that price does. So that's what I base it off of, right? I always wait for that consolidation before there's a buy model or sell model. There's always a consolidation. So that's what I wait for on a lower fractal. I wait for that consolidation, which would probably be like just one little up candle for that sake. Based off of here, it'll be like one little up candle, right? And then you'll have a down candle get formed, and then you'll have a break of that down candle, which would create a fresh order block. So this would be like a fresh order block right here, okay, that you would want to frame your trade off of. So the same thing that you do here, you're framing it off of this higher time frame order block. It's like the same shit. And that's how I really start stacking my entries a lot. That's what I do to stack my entries and to keep it conservative, right? To give price room to breathe. I don't put my stops here. I put them down here first when I enter here. right? So say I enter here, I put in 0.5%, stops below, risk 50%. Once I get this move right here, I'll enter my other half, keep stops below. If I want to keep it here, then I will have to wait for price to work inside of whatever PDA rate is inside of here. Balance price range or FEG, that's what I want to see get worked into here. And then I'll enter and then put my stops below and then seek higher objectives. But yeah, that's really it. How do I form an overall bias, directional bias, higher time frame? Just look at your higher time frame and say, okay, so let's say, because I think I did kind of go over this on the last one. You probably weren't in here, bro. So let's say we're looking at here. Okay, here, let me clear all this out for right now. Okay, let's say we're working inside of here. Okay, now we have a weekly order block that price just came into, and we're having the displacement lower. So once I see up candles work inside of here and I see up candles get broken, okay, my bias is my draw is sell side objective. So my draw would be here. So let's say we were in this week right here and I see price come into this weekly order block and break down. Okay. Now you have to know, okay. Oh, I'm on a daily, my fault. Okay. So on a weekly, right? It comes up into this order block and we get this very aggressive run, right? So I can't just be like, okay, I wanna buy now. No, for this weekly candle. I would expect this weekly candle to do a power of 3, open, high, low, and then close, right? So I'm expecting this weekly candle to go back bearish, right? So while we're going back bearish, that's my higher time frame draw. So what would be inside of there? You have fair value gaps inside of here, and then you have a rejection block inside of here and an order block inside of here. So that's what I would think price will be reaching for since we came from here, right? This would be my discount arrays that I'm looking for. So once I have these on a daily, you just scale down and then you'll know exactly how you will want to get in to this weekly candle expansion. You know what I mean? So that's how I find that higher time frame draw on liquidity, directional bias, my higher time frame, directional bias. Now you do the same thing on your lower time frames. Okay, you do the same thing. So like, let's say we came into this down candle right here. Okay, let me make sure I bring all my shit back up before I forget. But let's say we came into, oh shoot, what is this? Let's say we came into this down move right here. We're at a discount of this range. We're not at a premium, we're at a discount. So I would most likely want to buy more. We ran out this low and we ran out this low, okay? And then we had that run up right here, which created an hourly 4-hour order block, right? So now that we created that, where do I think price can reach for, right? Okay, so I know that price has buy side liquidity here, resting above here. So I know that I have this down candle that I could start framing my trade, my buy off of, right? So once my draw right now is up here, okay, it's up here. I'm not bearish until we break below here, right? Completely bearish to run down here. Once we come up here and we're at a premium array and I see price working to here, let's say price comes up into this array right here, and then I see a up candle get formed and then it gets broken, then I can start saying, okay, we might start reaching back down to here, here, or down here, and then create this this downtrend once again and create a new sell model, right? And this would be the end of consolidation, or here would be the end of consolidation. So that's how I would get my draws. Just find out where's the stops, right? Where's price at? Where's the stops? And is it at a premium or is that a discount? If it's at a premium, you really want to sell. You want to sell a lot more. You don't want to call tops or bottoms. You want to wait until price works inside of there and starts forming up candles that gets broken, which would be fresh order blocks that you could frame a trade off of. So say we came into here and we broke down like this, I'm looking at this whole range to start framing a trade off of. So I would scale down into a lower time frame, and you would be able to see like order blocks, FEGs, breakers, And then you could watch what price does inside of those, which they should be respected. Once price breaks above here, then my sells are invalidated, right? My sells are invalidated. My draw to the downside would be invalidated at that point, right? Even though we could have a run back lower, but I'm not bearish no more until we do that. And then I'll be like, okay, maybe we can start selling off again. So now I'll start try to frame a trade off of here, right? To start seeking sell side objectives. So inside of here, you'll see this, you'll see up, maybe an up candle get formed, and you could go to the hourly and start framing your trade off of there to get sells here, and then put your stops above here to start selling lower, and it'll be a whole sell model. Anytime price has a move down, it's a sell model, and anytime price has a move up, it's a buy model, no matter where price is at in the range, right? Or wherever price is at in this, you know what I'm saying, in this chart. It's always a sell model. Each leg, each buy model, each sell model. So you have to understand what's the objective and what price is trying to get to once it reaches a certain PD array. So if it reaches a certain PD array, where's the next draw on liquidity? If it reaches up here, and I know that it's working inside of here and it breaks down aggressively, right? Then I know that smart money could be in this move. And then my next my next draw on liquidity will be sell side objectives. So whatever discount array that's inside of here, sorry for my 3-year-old drawings, whatever discount array is inside of here, that's what I'm waiting for price to get down into. And then once we get there, I pause and wait to see what price does, right? And then once I see price confirm itself, that's when I'll take the trade and look for other trades. 50% or full retracement, bro. How do you trade higher time frame FEG? Oh yeah, okay. I already went through that. Yeah, 50. I mean, like you could wait for the consequent encroachment on a fair value gap. Just wait for your model to show up. Wait for price to like show that it wants to respect that fair value gap. You know what I mean? You don't want to just blindly take buy. That's where a lot of like new people who are trying to get profitable with smart money, they take buy limits and sell limits and just hope that price like holds it, or you know what I'm saying? They hope that price does something. You know what I mean? So like instead of hoping, you gotta take that out your trading. Hoping, fear, greed, you gotta take all that out your trading. So one of those things is what I just told you. You don't want to call tops or bottoms. You want to wait. Like a lot of people, they'll just put it's buy side liquidity here. Here's the hourly order block. Once we come up into here, I'm gonna keep my sell limit here and then put my stops above some type of refinement, and then hope that price drops from there and then goes lower. When you could wait for an entry model to happen here, right? And then you enter and then put your stops above. And then once price breaks above here, you know that it's invalidating you a little bit. So you can start cutting your lots if you want to. You could even take a smaller loss and cut a good amount of your trade. And right. And if it still drops, you still in the money. You know what I mean? And then like say you have this entry pattern right here. Okay. Oh yeah, I got my model now. Now I could enter here and put my stops above here. But how do you know this is going to be respected too? Now you do have confluences, right, that you could go off of, and whatever it is with that, whatever you back tested that works, then continue to do that. If sell limits are working, continue to do that. But if you constantly starting to get ran out and you feel me, and you feel down about it, that's not a good thing. You know what I'm saying? So it's better if you're having that problem, wait. So you have that stop hunt breaker structure. A lot of people will put their sell limit right inside of here, stops above. Okay, if you're tired, if you see your shit getting ran out and you hate that and it's making you feel bad and you don't like that, that's not good for your psychology, and it's gonna ruin your performance when you trade. So it's better to wait for what price does in here. If that is that fair value gap getting respected, is the bodies closing below that fair value gap, and once you have that, then you could enter right here. You can even put a sell limit right here because you have more confirmation, and then put your stops above, right? And then target sell side objective, and it'll be a sell model, right? You know what I mean? You can even wait for this to happen, right? And price breakdown again. Now this is your shift. This is your mitigation block. This is your shift in structure. So now you could get in right here. You have a fair value gap. This would be like a higher time frame order block. Right here, it's not too refined. Once price comes into here, then you can enter and put your stops above, because now you have that shift. and then it might be like a down candle inside of here that they reaccumulated that will pair with this side, with the right side of the chart, if that makes sense. That doesn't make sense, then you know, you'll see it once you really start studying the sell models and buy models. It's really, that's all it is. Stop point breaker structure, but it's more to it than just that. You get what I'm saying? You have to understand what they're doing on this side of the chart. And here you got to know what they're doing, right? You got to know if they'll come back all the way up here or if they'll just come to this breaker. Like you can know when they'll do that, when they'll come right back into that breaker, because they already worked inside of here, up here. You know what I mean? They already ran this buy side liquidity right here and worked inside of here, closed FEGs inside of here. So you'll know that a breaker, which is an up candle on a higher time frame, this would just be an up candle right here, and you're just waiting for price to tap back into that up candle to push lower, which it stops above once you start getting confirmations. But yeah. I hope that made sense. All right. Yeah, no problem, bro. Do you guys have any other questions? Bro, and to be buy side liquidity, it has to be in a lower low. What's LL? Low resistance liquidity. Lower low. For it to be buy side liquidity, it has to be in a lower low. This would be buy side liquidity. These are highs, right? Any high, any old high, high relative equal highs, double tops. That's buy side liquidity. Sell side is lows. Yeah. Yep. Yes, sir. No problem, bro. Any more questions or any other pairs? We got 6 minutes, so let's run the questions up a whole bunch, as much as we can, or another pair, and then we could just end this day, in this Zoom. We all good? Is it normal to have losses constantly using SMC? It depends on your plan. It really depends on your plan. A lot of people have a traded plan to where they do risk to reward of like a 1 to 2, 1 to 1, 1 to 1s, 10 pips, you know what I mean? 3 pips, and they have a higher strike rate. And there's another side that has a higher higher risk rewards, like 1 to 10s, 1 to 5s, 1 to, sometimes people go to 1 to 20s, like, you know what I mean? And they'll have a higher, lower strike rate, maybe 20, 30%, but that one win will make back all their losses. And then it depends on your psychology with that, you know what I mean? Which one would you favor? You know what I mean? So like, is it what was your question again? Sorry. Is it normal to have losses? Yeah, it's normal to have losses constantly using SMC. It depends on your plan. So if you have a high ass risk to reward or your trading plan, you don't break even when you should, then you'll have a lot more losses. But if you have a lower strike rate, a higher strike rate, you aim for like 1 to 1s, 1 to 2s, then you'll have a higher win rate and you'll better lose. But at the same time, you really have to know what the market is doing. You know what I mean? You don't 100% know what they're doing, but it's a good hint on what they're doing when you see price work in certain areas. But yeah, it's normal. All normal losses. Yeah. Yeah, it just depends on your plan. That's it. Depends on your trading plan. Don't think that like high risk rewards is better than people who take 1-to-1s and 1-to-2s. Depends. I know some people who make 20% a week, taking 1-to-1s and 1-to-2s. This dude is a freaking dog, dude. He's a freaking goat, bro. But yeah. All depends on the person. But yeah, is that it? Is that all the questions? All right, bet. Thanks for asking some questions and shit and being active in the Zoom. Yeah. All right, so I'm about to end the Zoom. Thanks for tuning in, guys. I appreciate that. And I hope you guys have a good week. All right, peace.